Hello everyone. Today we are going to learn about Modern Monetary Theory or MMT. We would have the Modern Monetary Theory explained using its salient features. We'll see how does Modern Monetary Theory works using examples, and we will briefly touch upon the MMT versus Austrian economic theory. Now, what's the core idea of MMT? Under MMT, in today's modern monetary setup, the government, if it has sovereign control over its money supply, the fiat money, it should expand its fiscal deficit and print it over to achieve its objective of full employment. The only limit to its objective can be put upon by inflation. If the government does that, it would not crowd out the private investment like it used to do in the old monetary setup. The taxes under modern monetary theory are primarily used to control demand and thus inflation. They are not, I repeat, they are not the primary source of revenue for the government, because the government can literally print the money. Points to be noted, however, is that no theory can give a complete picture of the economy. MMT is an effective theory on the monetary side of the economy. But as we all know, the economy has two sides, monetary and the real side. For the real side of the economy, if MMT is overdone, it can have productivity and business cycle impact on the other side of the economy. To understand that, we will need to know some aspects of Austrian economics, which we shall discuss in some other presentation, and then apply both of them together. Let's briefly touch upon the various monetary setups. Earlier, since the onset of civilization and the introduction of the concept of money, we have been more or less on some kind of a commodity-based system. The most popular among them was the gold standard of money. Not so long ago, we used to have something called Bretton Woods system. Under this system, the various currencies of the world were linked to the US dollar, and the dollar in turn was linked to the gold. So it was kind of a semi-commodity based system or an indirect commodity based system. What were the advantages and disadvantages here? Well, the advantage was that it used to keep a leash on the government spending, and the malinvestments in the economy used to quickly correct. This is because the credit extended by the banks used to mean revert, since ultimately it had to match up with the amount of gold present. The disadvantages were that the economy never realized its true potential. So even if there was demand in the economy for credit, the banks could not extend that beyond a point simply because there was not enough gold to back it up. Also, the government under this system had to make a choice between spending on sector A or sector B, spending on research or poverty alleviation, since the credit was limited. This system ultimately collapsed in August 1971, and the US president of that then, Richard Nixon, made the announcement. Today, we have something called the credit-based monetary system. The modern monetary theory emanates out of this credit-based monetary system, also called credit-based money. Now, how does this works? How does credit-based money works? Now, let's say a person goes to the bank to get some loan, get some credit. The bank extends the loan to the person in lieu of some collateral, and that's it. Voila! Credit is created and money is created in the economy. Why? Because, as the name suggests, money is credit in this system, and credit is money. So remember, in this system, money is ultimately be created by the bank out of simply thin air. It's a fiat money. Deposits in the system are not needed really to create the loan. They are being created out of thin air. They are only needed to balance the books. And instead, it's the opposite. It's really the deposits are being formed because the credit is being created by the banks, not vice versa. For more details, check out the money presentation, and the link will be provided in the description. So, we have discussed briefly, we have touched upon briefly on this, that in this system, government has monopoly over the money supply. It can simply print the money. How can it do that? Well, the government can run a fiscal deficit, which is the excess of expenditure over the revenue the government receives, and can issue debt. This debt can in turn be bought by the central banks, or in case of US, the Federal Reserve. And how the Fed will do that? Well, it will print money, and using that money, it will buy that debt, and that freshly printed money would go into the federal government's account, and that's it. Money has been indirectly printed by the US government. This process in modern day is also being called as QE, or quantitative easing. Also remember that the role of taxes in the system, where government has monopoly over tax collection, but under MMT, taxes are not the source of revenue. Rather, they are a tool to control demand and thus inflation. So what is the role of money for government, and how is it different for us from us in the system? Unlike us, for government, money has no store of value in this system. Why do I say that? Well, think about it. If you have something that is theoretically infinite and potentially you can have it at any time, would that thing would have any value for you? Of course not. So for the government, money has no store of value, but it does have a measurement value. Like for us, it measures its wealth, taxes, etc. using money. It's like a scale, like we measure distance in kilometers and miles. Money also for the government has a medium of exchange value, wherein it can buy goods and services using money. And the third distinct thing from us that the money has for the government is it's a tool to allocate resources and transfer wealth. How? Well, through the taxes the government collects, it reduces demand from one person or sector, and as the government provides those tax money to someone else, it increases demand and income of another sector. Or the government, when it increases fiscal deficit and print it over, gets the money, handed out to other person, let's say spend on health and poverty alleviation, plus transferring wealth from one to another. So the question comes again, where should the government spend the money? Satellites or healthcare? Under MMT, I would say, why can't we do both? Since government can increase the fiscal deficit, print it over, why can't it do both? And here's the answer. Where is the money? It's right here. Government has monopoly over it. It can increase the fiscal deficit, print more money, and that's what the MMT says. This mindset of spending on one sector while not spending on the other sector is a commodity-based monetary mindset, not the mindset that should be here in credit-based monetary system that we follow today. So some people may ask, what about inflation? Well, I agree. Inflation is the limit that can impose on this modern monetary theory. But I would ask, when does inflation actually occur? Inflation occurs only if we hit limit boundaries on the factors of production, or the slack on those factors of production goes away. So let me explain. In this case 1, let's say there are 100 people making a road while only 50 are needed. This is disguised unemployment, is what we call it. There's a commercial building nearby, and the contractor of that building is working to install some statues. Now, to be fair, that work the contractor is doing may be aesthetically pleasing. However, it has very low economic value. However small the economic value is, the contractor approaches the road contractor and asks for 10 people. The road contractor is happy to give him 10 people. Because of that, road work is not affected at all, as in any case only 50 people were required, and the work in the building is also completed. Now, however small that economic value is, in sum total, the economy is better off because of this. Let's take another case. There are 100 people, but this time all the 100 people required to make the road. And following the same schedule, the building contractor approaches the road contractor for 10 people. This time, the road contractor refuses. So in lieu of that, the building contractor says that he is ready to pay a higher wages to the laborers, let's say 1.5 times. So the overall price of the labor goes up because of it. And as a result of this, since some people have gone and worked on the building work contract with the building contractor, the road work is affected. And since the road has been delayed, the future productivity of the economy also declines. Inflation, as we've seen, has gone higher. And this is where inflation is hitting the economy, because we have hit those boundary limits, or we don't have slack to do this project. So you say, okay, let's say we can do both, but why doesn't the government do both in most of the cases? Well, the two states here. For rich countries, many a times the slack that is required, especially in labor, is not available. Also, the productivity of the labor is not increasing anymore to increase the slack, since the population is aging. Also, already the labor is at a high productivity plane compared to the developing countries. For poor countries, you may ask, then why the poor countries could have a lot of slack in labor? Why doesn't the government spend money on healthcare and poverty alleviation and remove it, since it has monopoly over money and potentially infinite supply of money? While agreeing with you that the government should not fuss too much about fiscal deficit and increase it, but it should be careful in spending and take smaller steps. Let's take an example. Let's say the government doubles its health outlay immediately. What will happen? A technological marvel, let's say software, that can improve the productivity of the economy can be made in 1 or 2 years. A mega expressway can be constructed in 3 to 4 years. However, a doctor would take 30 years to make. Human capital takes a long time to develop, simply because of its biological nature. It's not an overnight job, and no amount of money can help beyond a point. So if we increase the health outlay, if we double the health outlay, immediately the limit boundaries would be hit, since there is very little slack in that sector. And so the healthcare costs will zoom across the country, across the economy. and this will hit the poor and middle class badly, which is quite opposite of what the government intended to do. Let's take another example. Supposing the same thing the government does with poverty alleviation. What happens then? Well, the inflation would zoom because there wouldn't be supply. You say, okay, maybe the supply can come in 1 or 2 years or 3 years. Well, some supply would definitely come in 3 or 4 years. However, it would not be complete. Reason? Again, the bottleneck of human capital. Creating supply requires, especially away from the basic products, require skilled and knowledgeable workers, and that to build those will take time, and hence this will increase the overall inflation of the economy. And we have discussed this issue in greater detail in the inflation presentation. Do check that out and the link is given in the description. But just briefly I will tell you that an overall inflation in the economy leads to only one thing, and that is wealth transfer from poor and middle class to asset owners who are generally rich. Why is that? How does that happen? Well, if the price increases, the profit of the industries increase. Since the profitability of the industries have increased, the equity prices increase. Now the people's salaries will not be able to match up with the equity prices, simply because equity prices are one part of the gamut of real economy, which is services, goods and assets, while the other side is money. So salaries of people will never be able to match up to these higher equity prices and the profitability of the industries. So in essence, the asset owners are gaining at the expense of labor and middle class, the people who own their own labor, quite contrary to what the government again intended to do. So although we can't spend too much because we'll immediately hit the limit boundaries for those factors of production, we should take smaller steps. It's more of an art than a science, as then the limit boundaries will not be hit and the people really can benefit what the government wants. So just to summarize now, we are not in the old commodity-based monetary system. In the credit-based monetary system, the concept of MMTs are pretty effective, and so here government doesn't have to make a choice most of the time. It can spend on high-end research and it can do social spending as well. Both can happen till the time the limit boundaries or inflation is not hit. The government should not hence fuss over fiscal deficits, and the taxation is a very different tool in this MMT. It's a tool to control demand, not revenue collection. The sovereign has control over money in this credit-based monetary system. It doesn't really need taxes for revenue, only to control demand and inflation. MMT works on the monetary side pretty effectively. However, for the real economy side and understanding the concept of productivity, we need more economic theories. Final point, which is not really related to MMT but important. As you have seen in the last few slides, the real development indicator of a country is really the human development rather than the physical infrastructure development. Why? Because it takes time to develop. And once developed, even if the physical infrastructure goes away for some reason, let's say natural calamity, if the human capital is developed, it can recreate that physical infrastructure. So when you look at the country and its development, don't look at the cars that the country is running. Don't look at the number of television sets that the country has. Look at how much innovations the country has done, how many great engineers, scientists and doctors it has per capita. That's the real mark of development. So thank you very much for watching this presentation. I hope you like it. If you did, please do subscribe to this channel if you are interested in such content. Do like and comment if you have any queries. Thank you very much.